The Supreme Court just approved 3 million federal layoffs. What does that mean for you? And if you thought EV tax credits were a sure thing, think again. They're disappearing this fall. But wait, Ford's battery plant just scored a $900 million Lifeline. Could this change the game? Meanwhile, Amazon is stretching Prime Day into a week of sneaky discounts. Are you really saving? Plus, we'll show you how open versus closed-end funds netted our subscribers a major win. Stick around to the end to catch every twist that could upend your portfolio.
Hi, Deep Thinkers. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. I'm here with our host, Minister Rob Farian. He's the CEO and founder of Flying V, and as of last week, an ordained minister. Rob, do you have a story you want to tell us?
I do, yeah. I was the officiant of my first ever wedding. So yeah, I had that on Friday. It went swimmingly. I think I might have a little bit of a side gig, at least from some of the feedback I was getting. But yeah, I was down in La Jolla, California, San Diego area. Beautiful weekend. One of my wife's best friends got married, and yeah, I was fortunate and honored to be a part. So yeah, if there's anybody out there, you need a quick fill-in, last minute, give me a call. Rob, Flying V Group. You know, if you've got a problem, we solve it. I think that's just what we're going to start changing our tagline to. But yeah, Gary, you're actually on the move a little bit too. I know you've been in Portugal for the past couple of issues, but I believe you're in Vienna now and then moving again tomorrow, correct?
That's right. Yeah, after 6 weeks in Lisbon, I met actually my old business partner and Deep Knowledge Investing Board of Advisors member, Raji Kabaz, here in Vienna, Austria. We've had an amazing few days here touring the city, walking miles and miles everywhere. Here they say kilometers, but I think that's just like a fictional unit of volume or something. I don't know. But we've seen amazing. By the way, I have to tell you, Vienna is the cleanest city I've ever seen in my life. I have yet to see a piece of litter here. The buildings look like they all got power washed last week, and the cathedrals here were built hundreds of years ago, and they glow like, I mean, seriously, it was like they said God himself is coming for an inspection, and the entire congregation cleaned with Q-tips. I mean, these places are absolutely spectacular. Last night we went to hear Vivaldi performed live at one of these cathedrals. It was an unbelievable experience, really incredible. Happily recommend that. And then tomorrow we are heading to the airport for the very short flight to Krakow, Poland. And I'll be spending the next week or two in Poland. And then after that, I'm not sure where I'm going next. So, you know, I really have no idea. I do not have plans yet.
Love it, Gary. Yeah, and call out actually Anton Ivanenko. He's an intern with Flying V Group. He's actually based in Vienna and does some support with Five Things and a variety of other clients. So want to give a little shout out to Anton, being that Gary's in Vienna. But Gary, great stuff this week on the 5 Things to Know in Investing. We've got the DOGE wins issue. We'll be talking about the Department of Government Efficiency, and we'll also be talking about Supreme Court. We're talking EV tax credits, the big, beautiful bill, Amazon Prime Day, and then, of course, we'll close it up with our educational topic in which we discuss the differences between open-end and closed-end funds. So, Gary, let's start with thing number one. We're talking the Supreme Court. Their decision that the government does not have to expand indefinitely. You note that this frees Americans from more costly bureaucracy. Gary, thing number one, the Supreme Court clears the way for more layoffs. Tell us what this means for the American people.
All right. So, Rob, you know the rule around here. We are policy, not politics. But from a policy point of view, this is a gigantic win for the American people. Previously, our government only went in one direction. It just grew. And every time there was something new, a new job, a new agency, a new something or other, it could only grow. There was no way to cut the size of government. So anytime the government expanded, that was the new size and growing from there. So we had a situation a month or two ago where DOGE, the Department of Government Efficiency, recommended a certain number of cuts to the bureaucracy, and a lower court issued an injunction saying you can't do this. Well, the Supreme Court on July 8th said, yes, they can, and it's a great win for the American people. This allows the Trump administration to proceed with some layoffs at federal agencies, including the IRS, agriculture, Health and Human Services, and others while this litigation continues. Of course, there'll be more litigation. It's the United States. This is what we do well. But in the meantime, these cuts facilitated through buyouts and probationary employee terminations. Target, ready for this, Rob? The federal workforce approaches 3 million civilian employees. Those 3 million employees are larger than the population of 26 individual states. Okay, so it is the federal government workforce, just the civilian workforce alone, is larger than the median state. Now, I'm going to add to that that state and local employment is another 20 million people, and the military is another 2 million people, for a total government payroll of, ready for this, 25 million employees. Okay, so why can't we cut this? Why can't this happen? Now, proponents highlight potential cost savings, about $25 billion annually for a 10% staff reduction. Great, that seems like a good start. Some government advocates warned of potentially offsetting losses, claiming, of course, that productivity disruptions, I can't say productivity disruptions when it comes to government employees, severance costs and severance delays could have an impact. IRS and other agency cuts threaten to increase tax collection. Guys, I was already sold on the idea. No need to sweeten it. They further complained that regions heavily reliant on federal employment, such as the DC area and Northern Virginia, might experience outsized economic effects reflected in declining consumer spending and local tax receipts. As far as I'm concerned, this sounds like the Hunger Games in reverse, okay? I'm already sold on the idea. Okay, I mean, really, the regulatory state is now threatening Americans with reduced consumer spending in the DC area if we don't support more wasteful spending. This is the craziest thing ever. I mean, like, they're not even trying to make good arguments. They're just saying, but money for us, less for you. So, you know, I'm sorry, I don't have a lot of sympathy. Let's cut it and call it a good start and keep going. And by the way, I'm going to point out the unbelievable success that Javier Milei has had in Argentina, completely slashing the bureaucracy there. He got inflation under control. He got their budget under control. He did all of this in under a year. Let's learn from Argentina.
Yeah, great example there, Gary. And I think, like as you said, I'm sold. I'm sold as well. Love everything that we're hearing out of this. Now, obviously, on the other side, right, you're hearing government employees. They're saying service disruptions, reduced spending in the DC area without this, what we would call excessive and ridiculous spending, but that's another conversation. You say though this has a dual benefit. What do you mean by that, and why?
All right. So, you know, Rob, these whiners, these complainers are saying if the government doesn't grow forever, you know, how are we going to get anything done? And the answer is, for most of the history of this country, people somehow managed without government agencies telling them what to do all the time. So not only are there tens of billions of dollars of savings available here for the American people, worse than that, the costs of the regulatory state extend well beyond the gigantic obscene budget. Too many unelected bureaucrats have far too great a say in how ordinary Americans manage our lives. These bureaucrats can complain all they want about job losses and areas of the country dependent on government largesse, but the complainers ignore the millions more Americans struggling under crushing regulatory requirements. These stall job growth. They prevent small businesses from getting hold. They basically favor the gigantic businesses that have the staff and ability to manage increasingly complex regulatory requirements at the expense of ordinary Americans who want to start small businesses without the government trying to manage every aspect of their lives. Reducing the regulatory state will free people to be more productive, unleashing the dual benefits of lower government costs, and that means lower inflation, and increased citizen productivity. Okay, so somehow these advocates for ever larger government think their gains can't ever be reversed. For the first time in a long time, the small government crowd gets a small win. You know, it's not huge. It's not going to bring the government under control, but this is a great start. And the more that's done to reduce the size and scope of the regulatory state, the better and healthier we are going to be as a people. And you know what, Rob? You and I both run small businesses, right? Better for people like us to be able to start businesses, hire people, and grow. That's great for the economy. So, let's cheer for that.
Yeah. Yeah, no doubt, Gary. Love all the moves that are being made here, and you'll have no arguments from the DKI side, and we'll be sure to keep track of the progress and what these changes do to the government information that we get and report on. Gary, moving thing number two. So this happened quickly. It seemed like these EV tax credits, those started to get phased out. I know this is not a five thing, but we even saw stuff on the solar side. I was driving home actually today and got some ads from Semper Solaris talking about the 30% tax credits that are disappearing. But we're talking about the EVs here, helping U.S. internal combustion engine manufacturers. But could this potentially favor Chinese EV makers? You're going to propose a Trumpian solution. I really like that word, by the way,
Yeah,
as
that's
we
a good
talk
one.
about this thing. But Gary, thing number two, we're calling it the end of the road for EV tax credits. I'm sure Elon's all over this one too, and probably some of the friction, I'm sure, over the last couple of months between him and Donald Trump, President Trump. But Gary, tell us what we need to know about thing number two.
Yeah, look, on this one, I get the whole thing. President Trump needed the big beautiful bill to keep the tax cuts in place. Without it, the American people were going to be facing a gigantic tax increase. That's not good for anyone. But listen, Elon Musk wanted to be on board with this administration specifically to try to cut spending, to try to cut costs. I've been a fan of what he's been trying to do at DOGE. And, we've been honest about the fact that, even though we have approved of some of President Trump's regulatory policies, some of his plans for the economy, certainly keeping the tax rates the same instead of increasing, we've said all along that nobody from either party was going to cut spending. And that's exactly where we are. And, I understand Elon Musk's frustration with that. It's a completely legitimate point of view that he has. And I think the only reason I'm not more frustrated right now with the lack of spending discipline is this was something we anticipated a year ago, right? We told viewers of the five things a year ago, this is what is coming. No matter what, there will be more spending.
Yep.
Lots of reasons to go vote, but lower spending is not going to be one of them. Both candidates for president, both parties, were going to overspend. So that's where we are.
Yeah, Gary, you really nailed that and on record multiple times saying that, right? Regardless, Biden, Trump, Harris, whoever it may have been, the spending is the issue, and it was going to be the issue regardless of red or white. Gary, if the U.S. does stop subsidizing these EV purchases, and let's say China continues to do so, obviously to gain market share there, I mean, what can the U.S. do to protect its own EV environment and EV manufacturing industry?
All right, that's the right question, Rob, and I'm so glad you asked that. So let's take this apart for people a little bit. We were just talking about the big beautiful bill, and part of that did rewrite the rules for electric and ICE, internal combustion engine vehicles. That's just regular cars, okay? And this bill does favor conventional gas vehicles, and EV tax credits are going to be phased out quickly by September 30th of 2025. We're filming this in the middle of July, so coming up. Right. And so what this is going to do is shift focus in the United States away from EVs, which have been subsidized. And in fairness, why in the world were we subsidized? Were we having average Americans subsidize people who could afford to buy $90,000 cars, right? A lot of those EVs were expensive. So the whole policy was crazy to begin with. And the internal combustion engine vehicles, that's where our automakers make their money. So they're going to focus more on that at the expense of EVs. So great for US car manufacturers, great for internal combustion engine makers. But the concern is because the tax credits won't be here for the US based EVs, what that does is that leaves space for China to try to take market share. Now, Chinese electric vehicle makers are subsidized by their government, the Chinese Communist Party, in an attempt to win market share. And so the concern, and this is a legitimate concern, is if the US doesn't support our EV industry, our electric automakers, and China is subsidizing theirs, we'll end up with market distortions. our industry is going to be hampered. We've been watching this movie for the last 40 years and a whole bunch of other industries. It's something we've talked about many times related to the tariffs. And what that's going to do is leave a wide open space for China to subsidize their EV market. And, 10, 20 years from now, we can be in a situation where we don't have that manufacturing capacity, but China does. So the question is, what do we do? Because I just went on record as saying I am against us subsidizing. Why should the average American subsidize someone buying a $90,000 car? We shouldn't. It's not the right thing to do. But China's not going to play fair. They're going to subsidize their industry. What do? Tariff them, right? We simply equalize. We take the money that they are giving to their EV industry and we say, okay, well, that allows you to lower your price. Guess what? We're going to put tariffs on your goods and raise the price to the point where we don't lose our EV manufacturers. And for clarity, I am not against the United States making electric vehicles. I am against our government making that choice for people. I want our citizens to have the choice. You should be able to buy the car that you want, whether it's an internal combustion engine vehicle or an electric vehicle. And we should have domestic auto manufacturing capacity and assembly capacity in the United States for both. And if our trade partners are not going to play fair, then you use tariffs to level that playing field. And we shouldn't be picking our winners and losers, but we also shouldn't be letting foreign governments pick our winners and losers. So that's the Trumpian solution to this. And the only other thing I can say on this is thank you for attention to this matter, or for your attention to this matter. I got to practice that.
Yeah,
I didn't stick the landing. What can I say?
Yeah. Be careful. Be careful. We'll have President Trump knocking on our door. Hopefully, President Trump. Anytime you want to come on the 5 things, you just please let us know, and we'll let you use that sign off. Gary, before we transition to the next thing, which is kind of a follow up to what we were just talking about, I just want to remind everybody, head over to our website, deepknowledgeinvesting.com. You can grab a free subscription. All you need to do is enter your email. You'll be added to our email list, get all emails for new content posted to the site, deals, promos, webinars, and obviously the weekly version of the 5 things. You can also sign up for a premium subscription, $100 a month. That'll get you access to the entire DKI portfolio, buy, sell recommendations, breakdowns, premium gated content, and much, much more. This is the DOGE wins issue. We're continuing on, Gary, as a follow-on. We're going to stay talking about domestic EV makers. You mentioned that bill, the big beautiful bill, wasn't completely hostile towards them, such as Ford. So tell us, Gary, and thing number 3, a new outlook for Ford EVs after President Trump's tax bill. What is Ford preparing for?
All right, so Rob, this is the other side of the exact same issue. Ford had a $3 billion battery plant for EVs located in Michigan, my home state where I grew up. And they faced the risk of losing a licensing deal with a Chinese tech company, CATL. And the reason for that is because the plant was under construction and there was a question over whether, based on the Chinese tech they were using, whether it was still an American manufacturer. And so the new bill clarified and allows federal production tax credits if U.S. entities can retain effective control over their products. Ford qualified under this particular new way of looking at it, and they're going to receive tax credits. Now, you could say, hey, wait a minute, weren't you just arguing against that? Yeah, I absolutely was. But to the extent that Ford wasn't able to produce in the United States, and we're talking here about a $3 billion manufacturing plant in a state that really needs to get its auto industry going again. It was a situation where, because they were using Chinese tech, they're saying you're not an American company. Ford does retain control of it. The whole thing is complicated, but this is what they're doing. Now, the factory is going to produce LFP batteries. That stands for lithium iron phosphate. Those are cheaper, safer alternatives designed for entry-level EVs. So what they're trying to do is allow U.S. manufacturers to start to make lower-cost EVs, and it will save 1,700 jobs. There is tax credit-driven support. I don't love that, but the truth is, I would much rather the US government be giving tax credits for manufacturing than be giving money to the bureaucracy in Washington, D.C. Now, if someone wants to point out, hey, wait a minute, this doesn't all hold together. Yeah, the US government is a big, complicated thing. Nobody's going to get everything they want, but I would prefer this to more bureaucracy in DC. And if you want to point out that maybe none of the above is better, hey, that's a totally fair point too. Put it in the comments. I will read it. I'll respond. That's a completely valid point. But just remember, when you're running a government as big as ours, there are going to be some trade-offs, and this is the one that was made.
Yeah, Gary, with that being said, government-wise, I mean, are there any policy-related issues or could this create future issues for any of these US manufacturers?
Yeah, I think there is. Here's the thing. This is a multi-billion-dollar plant. Thousands of jobs depend on it. And this was dependent on policy decisions that could have destroyed it during construction. These guys went from a potential shut it down, right down, to $900 million a year in tax offsets. That's Ford dodging a major bullet there. But remember something, a different administration might see these things differently. And projects that seem risky under one administration may gain life under another with a different compromise. So, this move reinforces Ford's LFP battery pivot as a serious attempt to scale affordable EVs. It protects margins, but this is the danger of running a government and economic policy like we are, right? You're trying to build multi-billion-dollar plants that you intend to use for decades. And the outcome here, whether you build it or don't build it, depends on whether you're in favor with a particular administration. And control in Washington changes hands every 2 to 4 to 6 years. It's a dangerous way to run an economic policy. In this sense, the Chinese model can be considered superior because they are picking winners, but they have one government. It's the same government. What I would prefer to see is exactly what we talked about in the prior thing. I would prefer to see a situation where our government didn't pick winners and losers. We didn't have special tax offsets or special payments to people or companies. But if our trading partners are subsidizing their industries, we use tariffs to level the playing field there. That allows our free market to operate well, but protects our domestic industries against foreign companies that want to put us out of business. That would be the direction I'd like to see them go. To a large extent, this administration, the Trump administration, has gone in that direction. This particular one, the option was to kill the plant or to rewrite the law to keep the plant alive. They kept it alive. So this is where we are.
Yeah, and in the written version of the five things, there's a chart that shows Ford monthly U.S. EV sales. Noted it was a policy win for Ford, but Americans aren't necessarily lining up for more Ford EVs. That chart shows a decent run up from Q1 23 to Q4 of 24, but 25 has just been an absolutely dismal year for EV sales for Ford specifically. Moving to
think about it, Rob.
Yeah, go ahead.
When they build these plants, they need these plants to be operational for decades. So, they're trying to decide to build a plant or not build a plant and figure out if the policy, priorities of the next administration are going to favor them or not. That's a problem. That's really, if to the extent that people listening to this feel like I'm contradicting myself a bit or that I'm uncomfortable discussing this, it's because it's really complicated and not really a good way to do things. It would make more sense if we didn't do these kinds of subsidies and just sort of try to let the free market take over on it. And that's why it's difficult to discuss.
Makes sense. Gary, Amazon's Prime Day, moving to thing number 4, became a Prime Week, right? Seems like a lot of these discounts that roll on and on, you realize, well, wait a minute, is this actually a discount or is this just resetting the normal? You're saying Amazon's playing a bit fast, loose with the definition of a discount. Uh-oh, maybe Trump and Bezos will be coming for us. Shop carefully, you're saying. Gary, thing number 4, Amazon stretches Prime Day to Prime Week. But what does this mean for buyers?
Well, a big thing is Amazon is playing fast and loose with their definitions of things. So Prime Day was actually a 48-hour event. Prime Week is now 4 days. So, Amazon's just, they're taking liberties with the language.
Yeah, wow.
you know.
Reset it all. Reset it all. Yeah.
Right. So what Amazon did was they added extra days to the sale, and the sale does, it excites a lot of people. People pay attention, and the idea is that they would draw in more shoppers over a longer period of time. They would counter rival promotions after slowing growth in annual Prime Day sales. Um, and the other thing, and this is the thing that does make sense, because they're stretching out these big sales over a longer time period, it does make things like warehousing, delivery, packaging a little bit easier. They're sort of instead of compressing that rush, they're expanding the amount of time that they have to deal with these extra sales. This year, Amazon had fewer products on sales, but had larger advertised markdowns than years
Yeah.
prior. I'm sure we'll get to that. So, this the indication here, or the headline, was that Amazon chose specific products for aggressive discounts rather than the broader discounts of the past. But, the transparency here is not great.
Yeah, yeah, I think that's the issue, Gary. And then, I mean, we did a little bit of digging as well. I mean, are these advertised big discounts real, or is there kind of some funny business going on just with the way that they're actually messaging and marketing what this Prime Day, Prime Week has become?
So it's a little bit of a mix. I did take a look. There are some items that I'm familiar with the price of where there were markdowns, right? But um, one of the things that they do, and this is something that regular retail has done for a long time, is the week before Prime Day, they mark the prices way up and then they show huge discounts. And there were people who did screen captures, that were pretty funny. They were showing like a piece of furniture at a certain price, and then a week later, they showed the same piece of furniture at the exact same price, but they were saying, look, it's 40% off. It's 50% off. They doubled the price and then said 50% off. I did notice that as well. Like, there's a particular pool pump that I use to clear water off of the cover for my pool. And that pump normally goes for $125. They had it on sale for $95. Okay, that's a pretty good discount, right? But they were showing it at like 65% off, right? So somehow the $125 normal price was over $200, which was ridiculous. So there's no question they were playing fast and loose with this, and it's a little bit dangerous to do that. Like, retail has done that for a long time, but remember something: if we go back to the old days of the department stores, people didn't really know. You had no way to prove it. When it's Amazon, everything on the internet lives forever. People have screen grabs of things. You have what is it? Sites like Camel, which will track the price over time. So what people see is, here's the price. They jack up the price before Prime Day, lower it back to the same price and say, look, you're getting a discount. And because there's a digital trail of this, they don't get away with it in the same way. It's a dangerous way to run the business.
Yeah, I agree, and I think they've been coming under more scrutiny, especially on the advertiser side, for example, right? I mean, just in terms of flexibility you have with your own pricing. We even had an instance where we offered a discount on our website only for a client, not Amazon. Amazon delisted their product listing because basically saying, hey, we want to force you to buy through here versus getting it for a cheaper, better rate directly through the retailer. So I agree with you. I think it's a line that probably shouldn't be crossed, and especially if they get called out on it. I hope we continue to do that to keep the transparency, because yeah, a lot of funny business can be had, and especially with how much power and control they have over retail marketplace. This is the version of the 5 things for this week, the DOGE wins issue. Again, head to our website, deepknowledgeinvesting.com, grab a free subscription, premium subscription, $100 a month. That'll give you full access to the entire site, no paywalls, all current recommendations, buy order, sell order, the whole 9 yard there, and premium access. Moving forward, Gary, to wrap up this week's version of the 5 things, we're going to talk our educational topic every week. We try and introduce new investing topics for our audience. This week, we're talking about open-end versus closed-end funds. Gary, I want to start with a couple definitions of each of those. So, Gary, let's start with open-end. What is an open-end fund?
All right. An open-end fund is just a mutual fund or exchange-traded fund, an ETF, that issues new shares when investors buy and repurchases shares when investors sell. So what that means is that the share count fluctuates with the size of the fund. The pricing is determined once daily by the net asset value, which is just the fund's assets minus its liabilities divided by the outstanding shares, right? So imagine this for a minute. Let's say you have, a fund that owns the S&P 500, and you say, okay, well, here is $1,000, and the fund will say, okay, we're going to take your $1,000. We will go buy $1,000 worth of S&P 500 stocks, and then we're going to increase the share count of the fund, so the net asset value of the fund remains the same, right? The fund grows, but the share count grows by the same proportion. The net asset value is unchanged. They've grown the fund. They have your money. You own the shares. Now, let's say you want to redeem the shares. You say, hey, guys, I want my money back. Hopefully you've made money. Great. So what they do is it's the exact reverse. They go and they sell those positions. You get the cash, and then they reduce the share count by the same amount. Again, the net asset value is unchanged. The share count comes down by the same proportion as the size of the fund did. So all this means is that people buy and sell shares. The net asset value doesn't change because you buy or sell. And the size of the fund can increase or decrease. That's why it's open-ended. You can have a larger or smaller fund with an open-ended fund.
Very good. Gary, moving on, closed-end funds. Give us the definition and more information about closed-end funds.
All right, so a closed-end fund is just like an open-ended fund with one major difference. That fund issues a fixed number of shares during an IPO, that stands for initial public offering. After the IPO, investors can buy and sell shares on an exchange just like the regular stocks. Those shares trade on the open market and have varying prices throughout the day. So shares in this situation will not be bought back on demand. The price will move due to changes in demand. And as a result of that, and because these prices can change throughout the day, depending on demand, closed-end funds will often trade above or below NAV, stands for net asset value. So where an open-ended fund is always going to trade right around net asset value, a closed-end fund, because it doesn't change the number of shares outstanding, it doesn't change the size of the fund, these funds can trade at a premium or a discount to NAV.
Very interesting. Gary, in terms of preference, right? As an investor, I mean, do investors prefer one way or the other, or why might they prefer an open end or a closed end fund?
So the advantage of an open-ended fund is that fund is almost always going to trade right around NAV. You're getting true pricing, again, because the fund can grow and shrink. With a closed-end fund, the big advantage to that is that fund isn't going to grow. And it really matters in terms of, say, niche particular strategies where, like say it's a microcap strategy. You really don't want to be in a situation where that fund can grow to billions of dollars because they won't be able to buy positions. So one of the big advantages of a closed-end fund is you limit the size because not all strategies have an unlimited capacity. The other thing to be aware of is that closed-end funds will often use leverage. And so they can take on debt as a way of growing. You have to be aware of that. There are risks involved, there are expenses involved with that. Now, there are ways that you can take advantage of all kinds of quirks and things like that. And we've done that at Deep Knowledge Investing. So the most famous recent example of a fund trading at a large premium and then a discount to NAV was GBTC. That's the Grayscale Bitcoin Trust. Now, at the time, remember, we've only had Bitcoin ETFs for just over a year. Now, at Deep Knowledge Investing, we do think Bitcoin is a great thing to own. It's my largest position personally. And I'm a big believer in the old saw, right? Not your keys, not your coins. We recommend that people own your own Bitcoin. You should self-custody. If that's difficult or confusing or scary, I totally understand. at Deep Knowledge Investing, we have written a guide to doing it. And literally it is, I have annotated this, red arrows, push this button, fill out this thing.
Right.
We have made it as simple as possible. So you can self-custody if you want to. There's no need to be afraid of it. You just go through the steps and we can help you with that. But just,
Gary, real quick, yeah, before you get into
Yeah.
I know we're going to talk this grayscale Bitcoin trust story, but I did want to highlight for our listeners too that I think this is a really good example of the value and the premium that DKI brings to its subscribers. This is obviously one instance that we're discussing. I believe, Gary, this trade has closed out at this point in time, but I did just want to highlight that, right? I think this is a lot of the value, the way that you're thinking, the way you're researching the market, determining what recommendations to make to subscribers. So I just wanted to highlight that first, but then before you tell the story, Gary, but yeah, what did DKI see in Grayscale Bitcoin Trust that's different, that no one else, maybe, I'm sure others saw, right? But you were able to identify it. And then if you could just explain why that's such critical value to your subscribers as well, Gary, as you tell the story. But I wanted to make sure to highlight that.
Sure, thanks, Rob. And in fairness, we did make a ton of money in this and for our subscribers, and we were thrilled to do it. I was not the only person who saw this. This was, people did track this. But what happened was, if we go back to like 2020, 2021, something like that, the Grayscale Bitcoin Trust was the only way to get pure play exposure to Bitcoin that investors could buy in a traditional brokerage account. The only other way to do it was you had to go buy Bitcoin and self-custody it. And as we talked about, that scares some people. So the fund traded at a huge premium because people who wanted that exposure, if you want to put it in a traditional brokerage account back 5 years ago, that was how you had to do it. So the fund traded at a big premium to NAV. And, I didn't do that. I went and actually bought Bitcoin itself. Now, later, when Bitcoin demand temporarily faded, because it was a closed-end fund, a trust, the fund wasn't able to repurchase and retire shares, so the fund traded at a huge discount to NAV. We bought a huge position in GBTC when it traded at a 30% discount and when Bitcoin had come down by a huge amount off of its highs. When Bitcoin came back, we profited when the dollar price of Bitcoin rose and when conversion from a closed-end trust to an open-ended ETF caused that discount to close. So one of the things people have talked about a lot over the recent few years, recent few months, recent year, has been the incredible increase in the dollar price of Bitcoin. Because of the way we structure this and took advantages of quirks in the closed-end fund or trust structure, our returns on Bitcoin were 30% better than the returns that you see when people say we made, 5 times our money in Bitcoin, 6 times our money in Bitcoin. We did that plus 30%. And it was just a gigantic return. I still love Bitcoin, but I would not be buying GBTC right now. There are better ways to own Bitcoin than that particular ticker. If you want help with that, reach out at ir@deepknowledgeinvesting.com, or as Rob always tells you, just go to the Deep Knowledge Investing website, click the Ask Gary button, and we'll help you figure out the best way to own Bitcoin. And if you want to self-custody, we'll send you the guide to how you can do that.
Yeah.
At any rate, the whole point of all is if you want to know the next time we discover an asymmetrical trade like that, then subscribe and we'll be there for you.
Yeah, and I think that's the highlight to make. Gary and his team leaves no stone unturned in terms of understanding the market, finding strategic positions, advantageous positions, and regardless of what the market is doing, good, bad, indifferent, DKI prides itself on being able to make money in any economic environment. So definitely head over to our website, deepknowledgeinvesting.com, grab a subscription, and we look forward to having you as a part of the team. That concludes this week's version of the 5 things, the DOGE wins issue. We've mentioned multiple times, head over to our website. Worst case, like, subscribe, leave a comment. thumbs up, thumbs down. If it's thumbs down, we just ask that please let Gary know what you don't like about him or why you disagree with him one way or the other. Or it might be me too. Either which way. If you don't like the way I ask the question, something like that. We love any sort of feedback. Gary, before we close out, I will turn it over to you as always for today's closing thoughts.
Well, thanks, Rob. First of all, to the people watching this, we know your time is valuable. Thank you so much for spending it with us. Big round of applause to our young interns, Cash and Crow, Samak Jain, and Gideon Rodham, who have done a phenomenal job. These guys have just, like, while I've been going from country to country, they just keep things ticking along. Really nice job by them. Rob, always great filming this with you and the team at Flying V. You guys have done so much to improve the video version of the show. We really appreciate that. And for everyone else watching, if you want to give us a like and subscribe, that would be great. But if not, hey, we're not the boss of you. Do whatever you want. We'll see you next week.
Thanks, everybody.